Welcome back to Market on Close. Equities right now holding firm around not quite the highs of the day, but definitely not the lows. Let's talk where there is some movement. Scott Bauer is rejoining us from the floor of the CME, the CEO of Prosper Trading Academy. So bonds, gold, Scott, they do basically the same thing right now on an intraday basis, moving together. Do you expect that to maintain? Do they serve the same function?
I do expect them to maintain. They don't serve the same function, I wouldn't say in the more macro sense. Gold obviously has been the safe haven trade, and that's why we've seen this massive explosion over the last couple of months, 6 months or so. In general, over the long term, though, I believe you get less of a movement in gold than you do in bonds. I think gold is more or less a longer term type of safe haven trade than the bond trade is. And what I'm concerned, Oliver, not concerned about, but what I think is going to happen over the next couple days with Jackson Hole is that the market is not going to get what the market wants. The market wants a 50-point basis cut, or at a minimum, the hint that, yes, we're going to cut in September and we're going to stay on that path of easing. I don't believe we're going to get any kind of rhetoric like that whatsoever, and I'm afraid the market is going to take that very, very negatively.
So here's what's interesting, Scott, is they both, bonds and gold, are both tied to this, Fed market consensus, which is that the Fed's going to do X, Y, Z. Now that might be changing here at the moment as we start to sound a little bit more hawkish. If that extends to Powell, and he sounds hawkish too, would you rather be short gold, or would you rather be short bonds in that event?
So I think for a trade, I'd rather be short gold.
Okay.
Because I think that is the easy trade for people to make, for the retail investor to make, is to go in and short gold. And, and if you see, if you see, a hawkish tone come out, you may see gold drop 2-3% real quickly.
Yep.
Whereas I think it takes a much, in this environment anyway, a much longer path here to see a significant change in bonds. Now, what is significant? Does that mean the 10-year going from 160 back up to 2%, 160 to 180? I think you have to let that play out a little bit longer. So I would rather be short gold.
Okay, it's a great response, Scott, and I like the definition. So basically, the sort of, if I can try and pry a little further, the cause effect of what drives gold is perhaps a little more clear than the cause effect of the bond market right now?
I would totally agree with that. I also think it's more of a psychological trade, right? Because if you asked, 100 people on the street, that knew about the markets a little bit, what's the safe haven trade? Where's the easy access? They're going to tell you gold, right? So that's going to be the quick first reaction. And that's why I said as a trade, if that circumstance happens, I'd rather be short gold.
Yeah. All right. So this is, I think, a useful conversation. Not that we know any particular insight, but today's been sounding a little bit on the hawkish end, Scott, from the early language. Not that it should be a huge shock, because we've heard from some of the dissenters for the last cut as well. And Powell could strike a different tone, a more artful one perhaps. But we also got soft PMI today. And given all the paranoia around possible recession, I would have thought maybe we got a bigger bond rally on that. We didn't.
Yeah, absolutely. And it's like throwing a dart at the wall, right? Because earlier in the week, we've been getting great retail numbers, and everyone's talking about how the consumer is doing so well. And yet we get the first PMI numbers below 50 today in over 10 years. So you have these very closely watched economic numbers that people are looking at to decide the fate of what's happening with the economy and the fate of what may eventually happen with interest rates. And you have one on one hand and one on the other hand, which just convolutes the entire scenario. And that's another reason why I believe Jay Powell is not going to give any hint whatsoever of what their game plan is going to be, other than to say we're on this adjustment path, end of story.
Now, what's he going to talk about? The Overstock CEO? Is he going to talk about the Succession episode next week? He's got to talk something related to it.
Yeah, maybe he's going to talk about being out in Jackson Hole and the wonderful views that he has. Because, in all seriousness, what's he going to say, right? And I think this is a case of the less he says, the better off he and the rest of the Fed is right now, because you have so many people, so many traders, so many EFTs waiting, literally waiting to push that button based on one word, based on two words, a comment, a sentence. You know, so I think that more so than any speech he has given during his tenure, this is going to be so carefully crafted to be just middle of the road.
All right, Scott, really interesting stuff. We got to run. Good analysis here ahead of tomorrow. Scott Bauer is the CEO of Prosper Trading Academy. We're going to bring our panelists. We got 17